It's another day to do business. Good morning, everyone. Welcome to 55 minutes of current and relevant business conversations right here on Business Morning. I'm Ini John Mekwa, and we start from the global oil space as usual, where prices edge higher in early trading. Fears of further supply disruptions. That's what is driving that, and that's intensifying after U.S. forces said that it began striking Iranian military targets for the 11th straight night. And then Brent, of course, we see, has reacted to that. It's gone up almost 3% is what Brent has gained. So we see price now at $93.58 a barrel. WTI is also up, and the price is less than 90, but looking close to it at $86.77 a barrel. WTI has also gone up about 2.88%. And of course, this comes after oil settled at a 5-week high on Tuesday. U.S. forces, they struck targets in southern and western Iran, while Iran also attacked U.S. facilities in Bahrain, Kuwait, and Jordan. And the U.S. military has said that it began its latest strikes on Iran late on Tuesday in the U.S. And then the U.S. attacks came shortly, while the Kuwait army said that its air defenses were intercepting Iranian drones on Wednesday. That's early hours. And the constant trading of strikes, that has raised fears of further disruptions to global energy supplies after Yemen's Iran-aligned Houthis opened a new front in Iran war by threatening to target vessels carrying Saudi oil in the Bab el-Mandeb Strait and announcing a naval blockade of Saudi Arabia. So not a pleasant sign, and of course that drives down to what's going on in Nigeria. And we see Dangote petroleum refinery has resumed coastal loading. They paused for a couple of days, about a week or so. So they're now loading premium motor spirit, that's PMS, after 8 days of suspension, introducing a new coastal petrol price of $1,161.23 for a metric ton. That's up from the previous one. The previous one was about $1,050, $1,000 a metric ton. The latest price represents an increase of $111.23 for a metric ton. That's approximately 10.6%. And the development comes as industry sources indicate that gantry loading for trucks, which remains suspended, could also resume soon with a possible price review. And then we also have petroleumprice.ng, who gathers news around there, telling us all of this. And just for information, a vessel for the coastal loading now has an average of 20,000 metric tons of petroleum products, refined petroleum products, and that's about 20 million liters of refined products. That's the liters. And vessel price per liter is about 1,190 liter. For a liter. The resumption comes after the refinery halted both coastal and gantry loading on Wednesday, July 15, following the introduction of a dollar-denominated pricing template for refined petroleum products. While marine deliveries have now resumed, gantry loading for trucks is still suspended. On the multiple industry sources are saying that that may also resume with new prices. And still around that, Dangote Petroleum Refinery has rejected the Nigerian National Petroleum Limited's claim that it fully met its obligations under the federal government's Naira-For-Crude program, stating that the national oil company supplied less than 25% of the crude cargoes expected under the arrangement. The refinery's response follows NNPCL's position that it allocated all available Naira-denominated crude cargoes to the refinery and did not withhold feedstock. However, a senior Dangote Group executive said that the refinery received only 3 of the 14 cargoes expected under the program, and that most likely is why we see Dangote now pricing its product in dollars. Ahead to the markets, we saw a positive close yesterday, 0.19% for the oil share. It was green, and the market cap close to 160 trillion, which we hope we can regain really soon. So we saw the all share up 0.19%, the equity cap 159.119, volume the only one that was green at the close of trade, while value and deals were in the red yesterday. Top gainers, UPD Credit, Thomas Way, and Ikeja Hotel. Ikeja Hotel, we see they had their AGM yesterday and had some numbers right there. Perhaps that's why, they came back to the consciousness of investors. So they were part of the gainers yesterday. Top losers, we had Micure, HM Call, and CMFC. Top trades, Access, FCMB, First Holdco. A lot of profit taking happened on the top trades yesterday, so we saw a drop in the price of Access as well as First Holdco. First Holdco has gained a lot, so I guess investors just decided to take a bit of that. So 1 naira 50 kobo was taken off its price yesterday. And yesterday, of course, was MPC decision day, the central bank July monetary policy meeting that put Nigerian economic outlook in the sharp focus again, from interest rates to inflation, borrowing costs, mortgages in few instances, investor confidence. All of those were considered by the committee, and they got to the decision of sustaining the parameters that the country already had, at least for a couple of months more. Ladi Williams was on the show and put together this report.
Nigeria's Monetary Policy Committee has once again taken center stage, with markets, businesses and households closely watching the central bank's latest policy direction. As expected, there was another hold. Since the last meeting in May, inflation rate has moderated to 15.91% in June, with the Naira remaining largely stable.
The committee's decision to maintain the current policy stance followed a thorough assessment of the balance of risks. Although the headline inflation moderated marginally in June 2026, global uncertainties have heightened due mainly to the renewed hostilities in the Middle East.
Conversation then turned to expert analysis, with leading economists and market practitioners breaking down the policy implications and what lies ahead for the Nigerian economy.
The central bank governor had mentioned that in the coming period, Nigeria should expect more improvement. He mentioned that he expects inflation expectation to reduce. We are not expecting higher inflation, except and unless situations that are what we call externalities that are outside our control. We understand that global oil price, which of course have implication on energy, is completely outside the control of our nation. We also understand that excessive imports, even though we can manage it to some extent, but it may go to an extent where we may not be able to control.
Before the next meeting, pay attention to inflation. I would actually pay attention more to core inflation, and I'll pay attention to food inflation. As the governor mentioned, we're expecting the food prices to come down as we're getting into harvest season. So we expect that would trend down a little bit and then largely affect headline inflation that will also trend down. Pay attention to market liquidity. What exactly is the plan for the central bank to address that liquidity? I know there was a CRR debit about on Friday, last week Friday, as opposed to doing an home auction, there was a CRR debit, so we might need to pay attention to that. We're expecting more debits in the future when we have home maturities. That was going to happen.
As the economy continues to navigate inflation, exchange rate dynamics, and issues around the Strait of Hormuz impacting energy markets, the Monetary Policy Committee's decision remains one of the most significant drivers of financial markets and business activity. Ladi Williams, reporting for Channels Television News.
Welcome back. Well, of course, the decision is still very fresh in the air, and conversations, reactions, trailing all of that. But now let's switch a bit to the insurance industry. We know that there's a deadline for recapitalization for that industry, and it's on the last day of this month. So we'll see how the preparation to meet up with that is. But first of all, we need to celebrate the women again. A whole lot to celebrate. We saw the NBA, we saw a woman come out as the president, and now for the Nigerian Insurance Association for the very first time. We have a female chairman of the association, the 27th chairman, and she's right here with us in the studio. Ebele Chukwuwachuku, congratulations.
Thank you
for
much.
representing us.
Thank you very much.
Was it a tough fight? Did you have a lot of opposition or something?
Oh no, so it's a transition in the Nigerian insurance industry. It's a very smooth transition. So you become deputy chairman, you serve for 2 years,
and then you become the chairman. So everybody saw it coming.
Oh yeah, yes.
Something like that.
Except fundamentals change. Yes. Yes.
Okay, congratulations once again.
Much.
And I know coming with the fresh energy and all of that, we can be very expectant. What do you come with?
Oh, well, I've launched an agenda. I've launched an ACE agenda for the insurance industry. So I've come with a lot of experience, a passion for this industry. I'm in this industry because I want to be here and because I know that the value that the insurance industry presents to the economy is enormous. You know, so I launched a theme tenure called ACE. The first is about awareness. ACE stands for awareness, how we can make insurance, make Nigerians more aware of the insurance industry and what we do, how we can alleviate suffering, like when all these floods happen and there are losses, how we can make people know that an insurance company will actually save you in the event that you suffer a loss. You don't suffer a loss and lose everything when you have insurance. How to take insurance, improve our channels, improve our products, improve how we engage and make Nigerians enjoy what we offer as an industry. That's the first agenda that I have as chairman of the Nigerian Insurance Association. The second is about building our insurance people, capacity building, not just the people for leadership, but also building our capacity to underwrite large risks. A lot of our businesses are reinsured overseas. We want to see how we build with our new capital, how we build more capacity internally, how we are prepared to actually protect the assets of Nigerians and help to support the economic drive of the federal government of Nigeria. And the last is enforcement. Nigeria has 6 compulsory insurance products.
We mostly know of the third party for car insurance.
So if we even focus on third party only, we want to make sure that every car on the road has an authentic third party insurance cover. And that's just going to take the begging away when accidents happen. Provide compensation when people, when you run into someone else's car, or you run into someone else's property, that responsibility is transferred to the insurance industry. So we want to make sure that there's enforcement. There's enforcement of the third party, there's enforcement of group life insurance policies, there's enforcement of buildings under construction. That's a compulsory insurance. So if there's a collapse, the property around, the people who suffer losses, injuries are taken care of by insurance. So all of the compulsory products are on the table. How we engage, how we take people to understand them, how to purchase them, and how to lodge their claims. The focus of the insurance industry under the Naira Act, there's a great focus on customer experience and customer service, paying claims promptly, because now we have the capital
paying
to
claims
do it.
And making noise about it, because I think that's another thing.
Yeah.
I remember I had a conversation with the regulator some time ago, and when they reeled out the number of claims being paid, I'm like, well, you guys don't talk about it. If you don't talk about it, how do we know about it? Even I'm in the media and I do not know.
Yeah.
So how will people out there even trust you to say, oh, I'm not just doing this policy because I am compelled to. I'm actually doing it because it will benefit me one way or the other.
So we must tell the claim stories. We must. We have to find a way to do it. We protect our customers. We need to get that permission to talk about the claims we pay. We'll make that more transparent so we can talk about claims paid. You mostly hear insurance companies don't pay claims.
Exactly.
But we pay billions in claims. We
pay especially claims when you talk about
day.
The marine activities and all of that. That's huge.
Motor insurance has the most frequent claims in the industry. It's every day. Someone runs into a bumper, someone runs into a house. Their claims paid every day. The insurance industry pays those claims now same day.
Same day.
Same day.
Wow.
You bring your claim, you bring all the validating documents, and the claim is processed and paid.
Yeah, because if in a quarter, the insurers come together and say, oh, in this quarter, this is what was paid as claims, for motor insurance, for this. I think that's I'm just sharing
The trust
sharing.
will grow.
Yeah, exactly. Because a lot of people actually just buy those policies because they have to.
Yeah.
They don't even remember even when they need it. In a lot of cases.
We will tell our stories.
So your awareness you talked about,
yes,
I
we will
guess,
tell our, from purchasing to what it covers to what we do to claim
to what you have done.
We're going to make people more aware of.
Let me just get your thoughts on this plan to change the name of NICOM, your regulator. What do you think about it? What's the essence of it?
Well, we were part of it, as the Nigerian Insurance Association, the Nigeria Council of Registered Insurance, because we work very collaboratively as an industry. NICOM, is creating the regulator is taking more authority, asking for more powers, more independence to actually launch an insurance industry that is completely, very, very formidable and one that everyone can trust. So they're taking a strong position as regulator, while the industry then aligns to make sure we do the right things at all.
So that means that the name change will come with a tweak to the laws?
Yeah, there's a lot more powers to the regulator.
Okay,
yes.
that'll be given to the regulator. I hope you guys will not come and complain at the end of the day that the regulator
Like I said, we worked collaboratively. The drafts were sent to the Nigerian Insurance Association and all the industry bodies. So we went through it, we made an input. We haven't seen the final bill that was passed, but we're confident that it will carry all of what we've agreed should be there. We support our regulator, we want them to do well, because when they are strong, then we are strong as well.
Okay. And then the deadline is just about 9-10 days away.
Yes.
I hope we won't hear of a lot of companies being, maybe deregistered or something.
So a lot of the members of the Nigerian insurance industry have done all of what we are supposed to have done by this stage. So we have made the statutory deposit to the Central Bank of Nigeria. We have paid all the fees we should pay for the recapitalization process. And we have also paid for the verification exercise. The regulator got the auditors, some auditing firms, to do the verification. So it's transparent and the standards are same across the industry. So a lot of us have already subjected ourselves to the verification process. We've made our deposits to the CBN. We're ready. We are ready as an industry. Again, like I said, we work very collaboratively as an industry. So we knew that it was coming, and when the new law was passed, we were in a hurry to get to, comply. So by the 31st of July, and following the 31st of July, the regulator will then make an announcement on the companies. But, I don't think the way it's been structured, the way we've worked with our regulator, no policyholder will be exposed with this process. Instead, we're becoming a stronger industry.
So do we expect to hear stories of mergers and stuff like that?
Right now, I don't think there's any that is open to the public yet, but I know that, it will happen. There'll be some consolidation, and the regulator is making sure that those companies are not able to comply alone. They also, bring them together.
Platforms for that. But
yes.
Are all insurance companies members of the association?
Right now, yes. There's some that, you need to apply to become a member. So there's some that are not members at the moment, but all insurance companies want to be members of the association.
Or should be members.
Is
it want to be or should be members?
Should be, because we have standards, we have some requirements, really in relation to the consumer, as an association that we hold dear. So if you're joining the association, then you must comply with those standards. And we want to make sure that when people see the NIA logo on the letterhead of an insurance company, they know that those standards exist and that those are the companies to do business with.
So you talked about capacity, building capacity. I know that, before now, when they see someone who is not looking so good and says in the market, I say, oh, you're marketing insurance. But I believe the status has changed now. And when you talk about capacity, especially with the expectation of the new capital, what can we expect afterwards with the new blood that will be coming into the industry?
Well, first, you expect a stronger industry. It's an industry that has more capital to pay claims, to develop products, and to build more channels of distribution. Then you expect an industry that has more underwriting and technical strength, to write all the businesses in this market, from oil and gas to aviation, and writing simple risks, for SMEs and individuals as well. You also expect insurance professionals that are well-groomed, well-trained, and who know exactly what they're doing. And just an industry that every one of us can be proud of, and one that gives great returns to all its shareholders. There's a lot planned with NIRA. It is a great act, and we're embracing it completely as an industry to make a great change. What we want to see is a Nigeria where people are insured, where insurance policies are used to protect assets, used to protect lives, are used to plan a good life. This is what we're going to make sure happens with NIRA and recapitalization that will crystallize by July 31.
And when you say the enforcement part of your vision, what's that about?
So enforcement, third party, for example, like you mentioned, is a compulsory insurance product.
And I think for public buildings,
insurance for public buildings is
but I mean, sorry, before you go on, help me to understand, and I know there are a couple of people, what is a public building?
Buildings that receive, not your home, any building that is commercial.
But if I build a block of flats and I'm renting it out, is that a public building?
Yes, so there's some insurance that's also compulsory for those kind of buildings.
But is that compulsory?
That is compulsory as well.
If you have a tenanted block of flats or something, that is also compulsory.
It's compulsory that you have insurance on that.
So it's only when you build a house and you are resident in it, then you are not compelled. Is that it?
That is correct. We want you to still insure your home, but
obviously
you're not compelled to do it. Professional indemnity is compulsory. Your doctor must have insurance for the work that he does, so that if there are casualties that are not, that you can clearly define as not being professional, then you can lodge a claim. You can lodge a claim and get compensated. So if we take third party, for example, responsibility on the road is why we talk about enforcement. Not all cars in Nigeria have third party, even when it's compulsory. And some want to buy, fake insurance policies because they don't actually know the value of having the authentic third-party cover, that we recommend. So the enforcement part of my tenure is really to talk about the value of those products and how you can engage with the insurance industry.
Because I was trying to imagine how you want to enforce it. First, if you want to do the physical enforcement, you need a lot of personnel for that, and that's a lot of costs and logistics and all of that. So I'm just trying to understand how.
So we're looking for a lot of collaboration with government, collaboration,
NURTW, and
all. We're going to be reaching out to everyone to ensure that the collaboration to make this possible happens. And then we're going to use technology a lot to also drive the process. Already the NIA has platforms where you verify that your third-party insurance is authentic. We have the NIID platform as NIA, where you verify, and we have NIIP, where you can buy, authentic from any of the insurance companies that are members of the association. So compulsory insurance is a need. Group life insurance, for example, also, make sure that organizations that employ more than 4 people have life insurance for their staff. Compliance level is probably below 2% right now. So we want to make sure that compulsory products are engaged with very strongly.
We'll talk about the private sector, employees and all of that. That's not compulsory, yeah?
It is. If you employ more than 4 people, you should have
life insurance.
Group life insurance for them.
And you said it's how many percent compliance now?
Very, very low. Very, very low. The corporates, maybe the large corporates comply, but and then the smaller companies probably need to be educated a lot more, told about the benefits and the cost, It's not, insurance is a very affordable, very, very affordable product. So, we want to make sure that we move compliance and penetration ratio of insurance industry significantly, and our contribution to GDP as well.
You have a lot of awareness and enforcement to do.
I do.
But the good thing is that you're on the chair and you're a woman, so you have all the strategy.
Yes, and the people.
And support that you need from your members.
Yes,
Ms. Obelechuku Nwachukwu, the 27th chairman and the first female chairman of the Nigerian Insurance Association, also the managing director of Rex Insurance Limited. I guess we should have started from there, because if you are not a stakeholder, you would not be a member of the association.
Absolutely.
So congratulations, and we are watching, to see more enforcement and awareness.
It will happen. Thank you very much. Thanks for having me.
Good to have you.
Thank you.
All right. Just before we go on a break, we have to tell you about what has been happening. We've been talking about corporate governance for a while, and we know that the Chartered Institute of Directors, they've been planning and having a lot of meetings, and we've told you about some of it. Well, they finally had the summit, the 2026 summit yesterday, and there were some, really strong words that came out of there. Let's give you a bit of it. After months of preparations and meetings, the 2026 National Corporate Governance Summit holds, with attention of corporate governance shifting beyond the private sector to the public, on the theme, Implementing Good Governance for Economic Acceleration, Consolidating Public-Private Sector Partnership.
For Nigeria, the pursuit of accelerated economic growth demands more than sound macroeconomic policies. It requires governance frameworks that inspire confidence, strengthen institutions, attract investment, promote innovation, ensure accountability, and foster collaboration between institutions and the organized private sector.
The need to correct the perception that government has no business being in business comes up.
The assets under management by the state-owned enterprises are valued at least $13 trillion. That's for the central government. It doesn't include the subnational governments. In the top 500 companies around the world, a significant number of them are Chinese state-owned enterprises.
Corporate governance is not a cost of doing business thing. It is a strategic economic imperative. It is the engine that drives investment, competitiveness, innovation, and long-term prosperity. We cannot achieve $1 trillion economy, nor can we successfully integrate into global value chains of AFCFTA without robust governance systems.
It's a private corporation from collapsing under the weight of executive hubris.
The Vice President of Nigeria, represented by the Special Advisor on Economic Matters, Dr. Tope Fashua, could not agree more on the need for close partnership from both sectors.
When the public sector institutes far-reaching economic reforms, such as removing stifling subsidies, harmonizing foreign exchange windows, and unbundling strategic sectors, it establishes a macroeconomic foundation. But public policy can only create the environment. It is the corporate sector that must translate these policies into tangible goods, sustainable jobs, and national wealth.
The third summit is expected to deliver tangible outcomes that will, in the nearest future, strengthen board oversight and enhance governance awareness. Welcome back to Watching Business Morning here on Channels Television. Let's go back to that decision of the MPC yesterday, a whole decision which was largely expected. And it did seem like markets did not react because the decision was already priced in. We'll start from there in this conversation with Mr. Chinedu Agiriga, the financial ecosystem builder, joins us virtually. Mr. Agiriga, good morning. Welcome to the program.
Good morning. How are you today?
Fine, and you? I hope you're good. So, what's your...
I'm good, yeah.
Are you one of those who was expecting a whole decision from the MPC? Let's start from there.
Okay. I was thinking that the inflation rate is going to drop, but the with the wisdom of the CBN governor, that he decided to stay put on what they actually had in the previous meeting. So it's fine.
But why did you expect it to be cut, seeing that even inflation, increased, even though a bit, from May to June?
From May to okay, like what we would normally say, when something has to affect the common man in Nigeria, so we expect that more should be done by the government in easing the pain. But with the wisdom of the CBN governor, what he did is to actually keep it where it is, while they also monitor the economy of the nation, which I believe is right. With what he actually said when they had that meeting on the 20th and 21st, is to focus more so that the economy of Nigeria would balance. Why they see in the next meeting what will actually happen. So it will not give them the decision either to shift it or to still keep it. But I believe when they sit in the next meeting, there will be a little adjustment to it.
So how do you expect this whole position to affect businesses, startups, small businesses?
Okay, for small like businesses, if inflation is high, we also know that the interest rate is also high. So it becomes difficult for small like businesses to go to the normal deposit bank to get out loan, because the increase the rate is very, very high. And when the rate is very, very high, it also affects businesses. It affects businesses that the business will not have much fund to go into this operation, maybe getting new kits and all that. It also affects hiring of professionals. So there is a limit that the business can actually do when it comes to to this. So borrowing we reduce. Why the organizations try to manage what they have. So it calls for discipline at this point. Both small and medium and enterprises, they will know how to manage their funds very well. And if they are able to get loans from from banks, they will be more prudent when they are using those funds.
Can we say this will affect raising capitals for startups? Can we say this will have impact on it?
Yes, it will definitely have an effect. It will definitely have an effect when it is high. It will definitely have an effect. But for people, for investors that actually believe in what you do, for investors that actually know what your product will prove in the markets, they can take that risk in pulling out funds for you. And after the fund is actually put for you, it is the onus now rests on you, because you've gotten that funds. It is not enough in getting the funds, but it is enough to put that funds in reuse, so that the investors that have actually invested in your business, they will not lose at the end of the day.
And we hear that even for startups, after they have actually raised the fund, they face another level of challenge. Could you tell us more about that?
Okay, there is a different ball game when startup try to raise up funds. It's a different ball game. It goes to the news. I've raised $2 billion and all that, but that is just the beginning of your problem. As a startup, I would say it's a problem, because people have actually given you their money. People have actually put in fund into your idea. So what is now left for you as a startup is to put good use of that fund. Because if you don't put good use of that fund, then there's what we call return on investments. Those people that have actually invested, they'll be waiting for you to skate through with what you've actually come to them that you can do. But over the years, we've seen startups that have started, and within 2 or 3 years, they actually went down to the ground. But this is due to some things that the startup actually neglects. Most of them, their life, their mode of living, their style of living actually change over time. And more, like most of them, the cost of governance, they don't take governance into consideration when they're actually scaling up those big business. They just believe everything works. And most founders, like they believe they can go from A to Z, which doesn't work like in that aspect. As you scale up, as your business begins to grow, you try to detach yourself gradual by gradual from the business. When the business starts to grow, it is a different ball game where you start up a business and you have an employee from the scale of maybe 1 to 10. Like with that, I know, okay, possibly you can actually manage them. You can dish out instruction. You can say, do this and do that, and it will work. But when the startups start growing, there will be need for you to now hire more reputable hands. There's need for you to bring in supervisors and managers that knows that business way that will be able to help you run within that business. But most what we see most times is that most founders, they want to be the A to to Z to a business, and most times it doesn't end well.
So what advice would you give in dealing with some of these operational weaknesses that sometimes has led to the failure of startups even after they have raised capitals?
Okay, most of the advice that we always give founders, one, you should know how to manage funds. That's not like number one. You should know how to manage your cash flow. So you should also adhere to regulatory authorities. Depending on the kind of business that you are, there are bodies that are in charge that regulates those business. You try to play by the books. You try to to play what is expected of you. And most of the time, we also tell as the founders, founders, they should be careful of the people that they employ. Most time when you want to employ, it's better you outsource those employments. So that those outsource companies, they will know who are the best fits for the roles that you are actually advertising. For example, if your company has to do with production line, maybe from the mechanical, electrical, and the sales and all that. So it is not left for you to employ those people that will be able to manage those different sections that will help you. But if you put in people that are not capable to lead those sections, then a reverse will be the case.
All right, thank you so much for those tips, Mr. Chinedu Agiriga, financial ecosystem builder. Thank you for your time on the program.
Thank you.
And let's see what's happening with pensions. The first run 2026 consultative forum for states and the Federal Capital Territory that was held in Lagos yesterday. The contributory pension scheme implementation, the introduction of three-dimensional pension model, and even local government autonomy and the impact on the contributory scheme. They were part of the conversations there for the Director General of National Pension Commission. This is all to build a pension system that will protect workers and outlast existing personnel. The consultative forum serves as a critical strategic platform driving the Commission's ongoing push to align state-level pension structures with national standards, providing a framework for engagement on CPS implementation and subnational pension administration.
The three-dimensional pension model, designed specifically to help states resolve legacy liabilities while accelerating sustainable implementation of the contributory pension scheme. But let me be direct, if you permit me, please. No framework, no regulation, and no model, however well designed, can substitute for political will. Real reforms begin when legislation ends. Not when it ends, but where it ends. So execution is key. Reform begins with implementation, execution, universal coverage of all employees, prompt and complete remittance of contributions, proper funding of accrued rights, and the timely payment of retirement benefits. These four commitments are the difference between a pension law on the shelf and a pension promise kept.
As your present environment continues to evolve, it is imperative that we remain proactive embrace best practices, leverage technology, and strengthen institutional partnerships to ensure that our pension systems remain transparent, efficient, resilient, and responsive to the needs and aspirations of both serving employees and retirees. Lagos State remains committed to supporting initiatives that promote good governance, regulatory compliance, service excellence, and the long-term sustainability of pension administration in Nigeria.
All right, let's take a break now. When we come back, we'll go global. Please stay with us.
All right, let's get a check on the global economy now. But first off, let's see how markets in the U.S. performed yesterday with our correspondent, Maria Bird.
Gains on Tuesday as the Dow Jones was up at 0.74%. The S&P 500 was also up at 0.89%. And the heavy tech Nasdaq led the day up at 1.29%. As many investors were excited to see the positive swing in the chip maker industry, as it's clear that they are looking past the Iran-U.S. conflict, as they're focusing on the latest developments with corporate earnings. Only time will tell how the U.S. market will respond.
And markets are also keeping a close watch on rising geopolitical tensions in the Middle East after the United States confirmed its 11th consecutive day of strikes on Iran. Our Defense Secretary Pete Hegseth told lawmakers the conflict has now cost the U.S. an estimated $37.5 billion, while the Pentagon seeks additional funding to sustain military operations with fears of prolonged disruption in the region. Investors are watching for potential impacts on our global oil prices, inflation, and financial markets. We already see what's happening with oil already. All right, let's get a check on billionaire investors now. We see Kathy Wood. She's reshuffling her portfolio once again. Her flagship ARC funds, they've trimmed their position in satellite communications company Iridium Communications while increasing exposure to autonomous driving firm Pony AI, reinforcing her long-term conviction in artificial intelligence and next-generation mobility. The move underscores a continued rotation towards disruptive technologies as investors position for what many see as the next wave of innovation-driven growth. And it's another busy day on Wall Street today as earnings season that's gathering pace with investors awaiting results from some of the world's biggest companies. Tech heavyweight Alphabet, electric vehicle maker Tesla, they'll be reporting today, but Alphabet's in focus right now. That's coming after the markets closed today, with investors looking beyond, whether the tech giant beats estimates. The spotlight will be on whether billions of dollars in artificial intelligence investments are translating into stronger cloud growth, resilient advertising revenue, and higher profitability. The results also expect to provide an early read on the health of the AI trade ahead of earnings from other big tech companies. All right, we'll definitely be looking out for that later on today. Out in Asia, Japanese consumer stocks are under pressure as the yen hovered near a 40-year low against the U.S. dollar, raising concerns over rising import costs and weaker household spending. Retailers, restaurant operators, and leisure companies led the declines, as investors worried that a weaker currency could squeeze profit margins and dampen consumer demand. The yen slide is also fueling expectations of possible government intervention to stabilize the currency as inflationary pressures continue to build. And definitely see the Japanese yen, they're hitting 163 against the US dollar. That's the weakest level in nearly 4 decades. So investors are definitely watching out for that, and most of those currency traders right there. But we'll bring you more details later on Business Incorporated and what's moving those markets. Back to you, Nina.
Thank you, Ladi, and certainly he'll be back at 1:30 to give us intraday numbers on Business Incorporated. I'm John McCaw. Thank you so much for being a part of this. Enjoy the rest of your day.